Namaskar. Hello and welcome to PGurus channel. I'm your host Sree Iyer. This is episode 433 of Daily Global Insights. I have with me Sridhar Chityala and we'll be looking at the market as well as how the different indicators look for 2024. It's an extension of what we did last week. So please, I request you to like this video, and also if you have not subscribed to our channel, do consider subscribing to our channel. This is perhaps the only program that is looking at the global markets, not just United States, not just Europe, not just India. So this kind of gives you a 360-degree picture of what is happening and what is going to happen in 2024. With that, let's welcome Sridhar Chityala. Sridhar ji, namaskar and welcome to PGurus channel.
Namaskar and good morning to everybody.
Sridhar ji, we have a full plate in front of us and we are going to go through very, very quickly. With your permission, sir, I'll start the slide deck going and then you can start talking to that.
Sure.
Let's have the slide deck, please.
Right.
Fed. This was a major thing today. That was that Fed did leave the rates unchanged. Over to you, Sridhar ji.
Well, fantastic. I think that this is the most watched or observed topic in the world markets around the world. What is Fed going to do? Along the predicted lines, they held the rates, and more importantly, they gave indication what is to come in 2024. Better inflation numbers, better unemployment numbers gave them sufficient confidence that they would be looking at a 75 basis point cut next year in probably a series of 3 steps of 25 basis points. This was the news that the markets were expecting to hear, and the markets have responded around the world. And both the European as well as the UK Bank of England followed a similar type of pattern, so that the rate alignment is consistent with what the Fed is indicating. So all augurs well as we step into 2024 on the Fed rate situation, Sriji.
Thank you so much, sir. On a related topic, sir, when Biden came to power, within 6 months, I think there was a meeting of many country heads where there was an informal discussion about keeping the corporate tax more or less the same across many countries. I think if I remember correctly, the number mentioned was 15%, 15. To that goal, do you have any idea how all the different countries have responded? Because I think Ireland was at 12, which was why everybody was, trying to do what's called a tax inversion from US especially.
Well, I think that Janet Yellen was able to win that at the G7 and the G20 and the broad World Bank IMF conference. I think there's the harmonization of rates, and countries which were at a lower rate than the base rate of 15 to 20% will harmonize over a period of time. So there is a consistency in terms of the tax structure, effectively to avoid creating tax havens.
Thank you so much, sir. And tax inversion is a totally different topic, a very painful one for American taxpayers. We'll talk about that, a separate issue. Let's go on to the next slide.
So the next is the where does it leave the Fed funds rate? I mean, all we need to do is, we are looking at a curve from going to 2000, going from 6%, it has come down to, it came down to during the 2019-20, it came to about, less than I would say less than 1%, which is, close to 0%. There was a marginal uptick, and there was this dialogue between then President Trump and Dr. Powell, and to keep the rates down because the markets need momentum. Then what happened came COVID, and during the Biden era, there was overheating, more cash into the $3 trillion of $6 trillion of money injected into the economy, and the economy got overheated, and we saw very steep rate hikes. But the markets, because of the cash in the economy, the markets continued to reverberate, but the rates went up to core rates went up to 5.25 to 5.5%. Now we will begin to see the rates climb down. So this gives you a chart in terms of how rapidly in 22 to 24, we moved the rates up almost 400 basis points.
Next one, please.
Inflation. So where is inflation? Remember, we were at 9% and 8%, and in some countries, 20% plus. So Fed officials now confidently predict the core inflation to finish in 2023 at 3.2%. And going down to 2.4% in 2024. Why that's important? Because the Fed's band is between 2 to 2.25%. So it's very much falling within that band, which is what gives them the confidence to do the rate cuts. Now, recall during late 22 and early 23, we kept on speaking about verticalization of what we call the supply chain. I said Biden and Fed were using fiscal monetary tools to solve a fiscal problem. We had some of the audiences were critical. But now the Fed for the first time has acknowledged that they require the normalization of the supply curve. They call it as the vertical supply curve. This term they have never used in any of the minutes. So, we stand, vindicated. Our position stands vindicated. The issue is around the supply, and no amount of monetary work would have, tilted the balance. That's exactly what has happened in containing the inflation. Reduced cash, but increasing the supply and normalizing the prices is what has brought the inflation down.
Sridharji, it is also an interesting statistic here that inflation has also fallen in Western European, Indian, and broader Asian markets. India is a outstanding, or I should say outlier here, because they have been able to relatively weather the inflation curve better because of perhaps oil from Russia.
Two reasons. I think one is oil from Russia, and second is India is a vast producer and I would say self-sufficient in very core agricultural and commodity products. So therefore, for example, wheat, rice, cereals, etc. So therefore, the food price inflation they've been able to contain. If you recall some of the policies that we covered again in DGI, they stopped importing when they recognized that there was price harvesting that was going on. Wheat supply was curtailed, rice supply was curtailed, all to make sure that the domestic supply was not hampered and there was no price pressure in the domestic markets. So this is what has helped in conjunction with the oil prices, which was very pivotal. And I think India has made very clear position, made it stand very clear, say we help to stabilize inflation by virtue of what we did in the energy markets.
Thank you so much, sir. I just want to take a small segue and talk to all our viewers about 𝗤𝙑. 𝗤𝙑 is something that PGurus and along with my good friend from 𝗤𝙑 Art Project, we did this thing. It was his initiative and it's taken off. That's all I can tell you, viewers. We have shipped our first consignment. I had promised you that if I get 100 orders, I will make it in quantities. I estimated that 120 should cover it, but I was wrong. I have got now the second set of orders, but I don't have enough to order again. So if those of you want to order 𝗤𝙑, please consider doing so now, because I would like to get closer to what I would call as a realistic order quantity, so I don't lose money stocking this thing. Sridharji, you need to make space in your back place where you have the zebras. Place for this, sir. I'm sending you one.
Okay.
This is a beautiful 1 foot long, sir. 1 foot long.
Yeah.
2 inches diameter here, half an inch diameter here, and this is an exact replica of what you saw in the new parliament, where there was this elaborate when they moved to the new parliament, they did the ceremony, and a beautiful Nandi, sir. Beautiful Nandi.
Very good, excellent.
I'm going to send this to you, sir.
I await the arrival of the 𝗤𝙑, so it'll be in the next show.
Sir. Yes. So just wanted to give you a heads up on that. Viewers, please do order your 𝗤𝙑, because I want to order that, and I also am working to lower the cost of the 𝗤𝙑 so that it can be affordable to Indian market. At the current price, it is a little expensive for India. So what we have to do is a slightly change in process. So whatever you are buying here, you are also helping us over, ride over the cost of the, extra work that is involved in cutting down the cost to a reasonable place where we can actually sell this in big numbers in India. It's a great product. It's got intricate carving, so I can only tell you good things about it. I had the prototype. The manufacturing version looks even better. That's all I can tell you. Let's go on to the next topic, please. So,
Well,
go ahead, sir.
Yes, I think this curve points from January 2023. What was January 2023? We were around 5%. And already, we are now, the inflation has come down. No, inflation was around 9%. The inflation has come down to about 3.2%. This particular curve or chart indicates to you the dramatic fall in the inflation numbers. It's also important to point out that silently, United States has also been pumping has been pushing up its oil supply without announcing to the market. They've gone from about 9 million barrels to about 13 million barrels. So they've also been a stabilizing force, notwithstanding the fact that the OPEC plus nations are determined to cut production. So therefore, it's United States plus some of the smaller nations getting into the market has also helped in stabilizing the energy prices. And if you are in United States, a gallon now is about $3.25 as opposed to $5 or $5.50. California is always an outlier. Sree can comment what the gas prices in California are, but generally around the nation, it's about 3.25 per barrel.
Sir, our overhead per cost of gallon, this is just state imposition of taxes, is $1.12. So, and most likely in other states, it's like 10 cents or 20 cents. So we have a hefty margin, big heart. We want to spend a lot of money that we don't have. I can go on. But viewers, this chart is actually, Sridhar is right. It is 9%. It is difficult to see the numbers because it's a little bit like a wide angle, but it is the vertical axis is 5%. So you can see it was close to 9% in January, and now it has come down to 4%. So this was a huge risk the Biden administration was taking. For example, telling the Western Europe to shut off its oil requirements from Russia, to say that we will take care of it. And now I'm beginning to see Russia, even though they can say that Russia is winning the war in Ukraine or Ukraine is losing the war, whatever it is, both sides are quite weak now. Now is the time to sit down and do some sort of a ceasefire. I don't know if it's going to happen or not, but it seems to me that both sides are completely weak now. Well, we'll see. Wait and see what happens. Let's go to the next topic, please.
Okay, so now we look at we gave last week the US markets, but we're just giving you the equity market summary. S&P, we'll do a more detailed 2024 outlook as we step next week. But just to give you a headline, we are around 4,700, the S&P, and we could top 5,000 in 2024 and probably higher with a soft landing because we did not have a hard landing. The economy normalized. And we can also expect 6 to 8% growth based on what we are seeing both in the US, Indian, as well as the Western European markets in terms of the market performance driven by this Fed decision and positive inflation data.
Next one, please. Go ahead, sir.
Yes, S&P chart. This is basically to indicate again, we started, where we started. We started around 3,900 and we are now around 4,700 plus. So the markets kind of grew close to about 24% year to date, consistent with, remember last year, the S&P contracted 20%. This year it's up 24%, reflecting positive sentiments and everybody. And it's broad, not just purely to what we call as the major seven, indices, major seven shares, but it is broad across the market. This positive momentum is being felt.
Sir, 5 is FANG, F-A-A-N-G. That is 5. What are the other two, sir?
I think that the other two are, one is NVIDIA, is in that basket. So
maybe Microsoft.
Microsoft, NVIDIA, Apple,
and the other 5. Yeah.
Yeah.
Math adds up. Thank you, sir. Next one.
Next is the DAX, which is probably the European stocks, broadly looking at 600 stocks. Again, European stocks have performed exceptionally well. It went through periods of gyration, but relatively where it started, this is 600, taking broad outlook around the European market. They have also performed close to 20%. Reflecting that many people expected Europe not to perform because of all the things that Sree ji was alluding to, not only inflation, but war right in the middle of Europe, plus the energy crisis and energy prices, whether that could have negative sentiments and bearings in the market. It turned out to be the other way.
Next one, please.
Next is bonds, the fixed income markets, which were above 5%. If you were borrowing in United States or rest of the world, Australia was way off the charts. The mortgage rates were 7% plus. And then, suddenly, we get this Fed outlook decision without rate cut. It's rate staying flat. You are now beginning to see the positive momentum creeping into the market, and the rates have now fallen for the first time. The 10-year US Treasury rates is now below 4%, auguring well for both equities and fixed income market. This is the indication of the numbers. If you see the US 10-year Treasury bond somewhere in the October-November timeframe, we crossed the 5% mark. We are now, the 10-year rates are around the 3.95%, 3.95%. Actually, when I got into the program, these fixed in 10-year prices never stop. It's a continuous 24 hours, 7 days. It keeps tracking, keeps moving based on the demand supply situation, and it's now around 3.9%. Again, auguring well for the fixed income market, those who are trying to enter that market. Consistent pattern in the bond market, which is the 10-year bond is now around 2.06. Again, look at the chart. It was greater than 3% at its peak, influenced by the economic factors, aligned with the US market. Most of the rates kind of tilt up around the same time. That's again October, November. It has come back. The number that you see in February, March is due to the energy shocks and supply issues. It propped up, but again, it began to fall, with the drop of the inflation. So, European bonds are also following a similar kind of a trajectory. They're far more attractive. Of course, they're discounted for currency rates between dollar and euro.
Next one, please. Yeah.
The 10-year, if you want to borrow money, if you can, the best place to borrow money is Japanese yen. They've always been less than 1%, but they went up close to 1% again in the October-November timeframe, but they are now back to 0.67%. Is the Japanese yen Japanese market is flush with cash. They're searching for yield. Even if they can get 1% yield on their fixed income or less than 1%, they're very happy. India borrows a good chunk of money from Japan, and they have a good kind of an arrangement, but the Japanese yen is a good place to be if you are a borrower.
Sir, give a hint about the amount of money India has borrowed from Japan, sir.
Somewhere it's close to, I think the numbers that I have is close somewhere between 100 to 200 billion in equivalent to dollars in yen. But they have a lot of credit because Japan has number of programs, these fast trains, super fast trains, infrastructure. Japan has committed close to $1 trillion or 5 to 7 years in terms of investing in infrastructure. And many of them come in the form of soft credits.
Yes, indeed. And viewers, we can thank Abe for this. He was great friends with India, and poor man had to die the way he did. But this is all his vision. That's what is Quad. That's what is this. And most people don't mention the amount of credit India enjoys from Japan. Mostly it is, in Japan is underwriting, like, for example, the bullet train project between Mumbai and Ahmedabad. That's one thing that comes to my mind. But this is a huge, positive for India that Japan is willing to take this kind of a chance. Thank you so much, Sridharji, for that. And let's move on to the next topic, please. Yeah, over to you, sir.
Yeah, so we come to commodities, and commodities, we covered oil last week. We have seen the oil drop to about $74. Now we see the other, what you call the black gold, or the other very, very important commodity which everybody watches is gold. So will gold breach 2,200 in 2024? That's the biggest question that is being posed in the markets. Why? Because there's also buying from central banks. There is also, as the rates come down, there is also a shift towards buying gold generally. So that's something that we will show in the next chart. On the food has been the biggest success story. The food inflation has come down. You don't see the chart here, but I can tell you that, for example, if you recall, wheat was around $1,400 a quintal. It has now come to about $640. That's a dramatic price. Whether it is coal, whether it is wheat, whether it is rice, whether it is cereals, whether it is copper, there is a broad price reduction, driven by two factors: better harmonization of supply, that's number one. Number two, the Chinese, who are big buyers, their economy has contracted, and the numbers are always fuzzy, but people give numbers between 13 to 17%. But all of this has helped the stabilization of the commodity markets.
A couple of things, sir. One is that I hear that India cleaned up big selling or exporting wheat to many countries last year. Is it true? Or through 2023?
Well, they made a big, we covered this, if you recall, Sriji, that they were able to sell wheat when the wheat prices were going up. But the moment they realized that somebody was doing cross trades out of the Singapore market, they decided to cut it. I'm sure you can guess who that is. So I think, of course, India stabilized it in big time. And this is where you have to go back. This is, I'm sure many of your political analysts would have covered it. You remember the farmers' agitation around,
yes,
and then how they didn't want to go to market-linked prices? Many of them lost out. And Modi said, thank you so much. And this is how he has been able to inject savings that he has achieved through exports and less prices to the farmers, because they wanted a guaranteed price. He gave them the guaranteed price. They lost out on the bounty, and that money flowed back into the economy.
Yes, indeed. Sometimes, this is purely passion. The story here is one minute, sir. The average Jat Sikh, the one who has a lot of land holding in Haryana and Punjab, they have a lot of attachment to their land, whether they are in Punjab or in Canada or in UK or in Australia or in US, anywhere. They still think of holding on to that land. And this is the primary driver behind this agitation in Punjab, because they figured that, look, we have control over so much land. Why don't we try and make a stand and try and see if we can further the cause of Khalistan from this? Money came in from that into India, and all the ruckus, you just take it that way. Now what has happened is that as the wheat prices started going up, these guys were still staying on the same price. They were not allowing people to enjoy the float in the wheat prices, and they lost out. So sometimes, all these things do come in. Short-term thinking for long-term pain. Anyway, next thing, sir, I wanted to tell our viewers, there was a rice export ban from India to the United States and perhaps to the West a few months ago. I am happy to say now, I'm beginning to see Sona Masuri rice in the stores now. I've been able to get it in California. Those of you who are going to, stores, let me know by way of comments if you are able to get Sona Masuri in many of the common big stores now. Sir, rice is a very popular item these days.
Rice is very popular. It is consumed. It has become the staple around the world. And so therefore, and also I think we gave you a stat. Today, about 15% of the US population is immigrants. That's 50 million. Whether they are illegal or legal doesn't matter. Vast number of them have come from rice-consuming nations. So there is also the domestic spurge in demand. India was one of the big suppliers, along with Thailand and Mexico and so on. but India cut its, especially a non-basmati rice, because that is highly consumed locally. There was no, this furor was just a rumor. There was no reduction in the basmati rice. Basmati rice continued to flow into the US market. But
Yes.
as Sree pointed out, I think that those things have been stabilized right now.
I have to say this in humor. You never take on a guju on markets or on industry, or never.
Never.
Next one.
So gold,
Gold
I
chart.
think we are,
Yeah.
we are indicating the gold chart. We started from about 1850, Sree. So if you have decided to put some money, you are selling gold in gold. Therefore, the price, it is a good benefit to people who are buying from you. So therefore, including to yourself. It is now around 2048, and they expect far more. A little more uptick in 2024, only driven by the demand coming from the central banks are also probably allocating little more of their assets towards the gold rather than everything in currencies.
Next one, please.
Global trade. Well, we have covered, how India upped the ante and increased. If you recall that in FY23, that is, which finishes in India around September 30th, the foreign trade was around $800 billion, and it has they had set a target of about $1 trillion plus. Obviously, global trade contracted 5% in the world, but not in India. And India is still, tackling small segment of the addressable market that is available. Global trade is 32 trillion at its peak. It'll finish 30 trillion in 2023. And even if you take 1 trillion, it's just about 3%. So India's got a big opportunity to be a net, I won't use the word net exporter, but an exporter. Vast part of it is cornered by United States, China, and some of the other countries.
Go ahead, sir.
Okay, so we can take some questions, but so next week we will focus very much on the outlook for 2024 across the markets, what we can see around the world. We will also touch at a macro level India. Broadly, it's a very positive movement. We already covered at a high level the evolution of the economies in 2024 last week. What will be the market drivers for 2024? Is it the same or is it different? Is the bias will shift from tech to non-tech? And it's also an election year, so whether we would see 75 basis points or 125 basis points cut in the Fed rates, because, of course, United States is not spared from the election antics. United States also plays to the election antics, so you may see some favorable Fed policy which feeds into the market. We'll cover that in the next week, Sree.
Thank you so much, sir. And viewers, I hope you like this program. It's a different format. You all asked for it, and we have got, last one. Sir, we did include this one. So go ahead, sir.
In one chart, this one summarizes for you what did the US equities do 2022 versus 2023? Down 18%, up 24.5% year to date in 2023. What did the world equities do? Down 17.7%, up 21.6% in 2023. This is usually here in the United States. I don't know whether the same pattern is followed in the rest of the world. Probably in some parts of Europe, which you call 60, equities 40, fixed income, that's an indicator. That also performed well at 15.3%, so which just shows you that the fixed income market did get back. US dollar cash, which was at 1.5% last year, generated positive 4.9% in 2023 because of the high rates. You're not going to have that in 2024. And the US aggregate bonds, these are bonds, they were down at minus 13% and marginally up in 2023 because of falling rates. The commodities, we touched on this, which is namely in last year, it was down minus 10.2%. It was up 16%. Sorry, it was up 16.1% last year, and it is down 10.2% because of the broad cross-section of fall right across all segments of commodities. It's not minerals, metals, agro products, everything. We have seen a downtick in prices.
The viewers, I think what Sridharji meant is that particular number is flipped, and lower commodities is actually a good thing. Therefore, that's why, is it correct, sir? Because the chart says the other way.
No, chart is correct. It says that in the broad green means is 2023. Light green means it is 2022. Okay, so 2023, we are down 10.2%, very positive, because that's how the inflation has come down. This just gives you, how the commodity prices can play, how commodities and rates can play a role in the inflation in conjunction with cash supply, right? So therefore, it's a very important data point for those who are, because of our, broker deal and other kinds of, we don't advise on stocks, but people can use this type of data to make their own judgments as to how they allocate their capital to kind of not only make investments, but also to assess how the world markets are performing and how the world economy is performing.
Thanks for clarifying that. When I read the legend and the x-axis, I understood what you meant. You are right. I was wrong. Thank you so much, Sridharji. And viewers, there's a lot of stuff that's happening around the world. It's difficult to keep track of all that. In this once a week, 30 minutes, you get the complete picture. Sridharji have done a great job. I don't know how many hours it takes to put together the research. All we are doing is rendering and talking about it. So thank you, sir. The viewers, just a small request. This is a very serious program. You don't find something like this. You can go and, you'll have to watch 10 programs on YouTube, each one about an hour long. Whereas what you're getting here is a concise, very accurate description of what's going on, what's going to be happening. And please remember that this is a very serious program. You do want to watch it. Many of us, if we had sold our stocks in 2022 because they were going low, you would not have seen the upside this year. So that is a very big takeaway from all these things. And again, I must say that this presents a more rosier picture for the United States than what I have seen anywhere else. It's all gloom and doom. But what we are seeing here, looking at the numbers, US is going to do just as well as perhaps India. And that's something that's a takeaway for those of you who are investing in US markets. Thank you once again, Sridharji. And please like, share, and subscribe to our channel, viewers. And if you have not clicked on the bell button for notification, do click on that. And you need to click on all notifications so that you will get, there are 2 or 3 different types, and just choose all. And you will get notifications of our program. We will be here, rain or shine, Saturdays at 6:30 p.m. IST and on Tuesdays at 6:30 p.m. IST. Please set your calendar because you don't want to miss this program. Thanks once again, Sridharji. Namaskar.
Thank you so much and have a wonderful weekend.